Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TIANQI Lithium Corporation Annual Report. TIANQI Lithium Corporation is a leading new energy materials company that offers a diverse range of products and services. At its core, the company specializes in the production, processing, and sales of lithium chemical products across three major regions: Australia, Chile, and China. The company's product portfolio includes various grades of lithium carbonate and hydroxide monohydrate, which are essential components for battery manufacturing. Additionally, TIANQI Lithium Corporation produces other critical materials such as lithium chloride anhydrous, lithium metal, sodium sulfate, non-ferrous metal ash slag, aluminium silicon powder, and sodium hypochlorite. The company's product offerings also extend to technical-grade lithium spodumene, which is a key raw material for the production of lithium carbonate. With its extensive range of products, TIANQI Lithium Corporation has established itself as a major player in the global new energy materials market. TIANQI Lithium Corporation market capitalization of $102 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that TIANQI Lithium Corporation holds a significant advantage in their industry. TIANQI Lithium Corporation trades at a higher price-to-earnings ratio of 145 times, and a higher price-to-book ratio of 1.64 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 28% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company are multifaceted and can be attributed to several key factors. Firstly, the sales of lithium compounds and derivatives, as well as lithium concentrates, have been significant contributors to revenue growth. Additionally, the strong demand for new energy vehicles, NEVs, in China has driven up production and sales volumes, leading to increased revenue. The growing penetration rate of NEVs in the Chinese market, coupled with government predictions of continued growth in the automobile market, has further fueled revenue growth. The development of hard rock lithium mineral resources and the expansion into downstream sectors such as electric vehicles and 3C electronic products have also contributed to revenue growth. Furthermore, the company's ability to enhance its resource security and stability through dual resource guarantees and an integrated supply system has provided a stable foundation for revenue growth. Capacity expansions in key locations, such as Jiangsu Zhangjiagang in Australia, have also increased production capacity and driven up revenue. On the other hand, the primary drivers of revenue decline are largely attributed to market fluctuations. A decrease in sales prices of lithium products due to market fluctuations has led to reduced revenue from external customers for lithium compounds and derivatives. Additionally, a reduction in usage of chemical-grade lithium concentrates has resulted in higher production costs, further contributing to revenue decline. Overall, the company's ability to adapt to changing market conditions and capitalize on emerging trends will be crucial in driving future revenue growth. Net income experienced a contradictory change between the 2 years. On one hand, it decreased from RMB 5,991,309 in 2024 to RMB 4,058,448 in 2025. However, when considering the net income before foreign exchange gains and losses, it increased by RMB 1,255,056,000 from RMB 365,249,000 in 2024. The profit margins also underwent a change, decreasing from 45.98% in 2024 to 39.32% in 2025. This decline can be attributed to the decrease in lithium products sales prices due to market conditions. Nevertheless, an improvement in net foreign exchange gains resulting from exchange rate fluctuations contributed to an increase in profit margins. The reasons behind these changes are multifaceted. While a decrease in lithium products sales prices negatively impacted profit margins, improved production efficiency, product quality, and operational resilience had a positive effect on the company's overall performance. The financial health of a company can be gauged by its ability to generate positive operating cash flow. This metric indicates that the company is able to cover its operational expenses and generate excess funds. According to the provided information, the company has achieved this milestone. A closer look at the data reveals that in 2025, the company's operating cash flow stood at $889,807. This figure signifies a positive trend, indicating that the company is financially stable and able to meet its operational needs without relying on external funding. The generation of positive operating cash flow is a crucial aspect of a company's financial performance, as it enables it to invest in growth initiatives, pay off debts, and reward shareholders. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there is a mixed picture. On one hand, bank acceptance notes receivable decreased significantly from RMB 753 million in 2024 to RMB 384 million in 2025. However, interest-bearing bank borrowings increased to RMB 13.6 billion in 2025. This suggests that while the company may have reduced its short-term debt, it has taken on more long-term debt. Regarding interest expenses, there is a notable increase from RMB 600,534 in 2024 to RMB 622,007 in 2025. The breakdown of interest expenses reveals that both interest on bank loans and other interest expenses have increased. Interest on bank loans rose from RMB 694,617 in 2024 to RMB 753,674 in 2025, while other interest expenses increased from RMB 79,093 in 2024 to RMB 98,249 in 2025. Interestingly, despite the increase in interest expenses, the interest rate for borrowing costs decreased from 6.05% per annum in 2024 to 5.6% per annum in 2025. This suggests that while the company is paying more in interest, it is doing so at a lower cost. Overall, these changes indicate that the company's debt level and interest expenses have undergone significant shifts over the past year. The financial performance of the company's various segments and regions has been mixed. On one hand, lithium concentrates have shown a contradictory trend, performing well on page 12 but poorly on page 13. This inconsistency suggests that there may be underlying issues affecting this segment. In contrast, lithium compounds and derivatives have consistently performed poorly, as noted on page 12. The decrease in reportable segment revenue from $13,029,739 in 2024 to $10,322,472 in 2025, page 14, further indicates a decline in overall performance. The performance of company other projects and unallocated head office is not explicitly stated, making it difficult to assess their contribution to the company's financials. Management is optimistic about the company's outlook due to several favorable factors. The solid-state battery industry is expected to experience significant growth driven by strong policy guidance, technological breakthroughs, and capital investment. By 2027, the market size is projected to reach 88 GWh, while it is anticipated to exceed 206 GWh by 2030. The company will focus on next-generation battery technologies, including advanced new energy materials and solid-state batteries. It will also invest in emerging application areas such as electric vehicles and energy storage. Furthermore, the company aims to innovate in battery recycling and resource recovery, develop new products that meet relevant standards, and drive digitalization through its Digital Strategy Committee. The positive outlook is attributed to the deepening global energy transition, which presents new growth opportunities for battery materials. The company has also entered into a partnership with other investment institutions to invest in new materials and new energy sectors, further solidifying its position in the industry. Overall, management's strategy emphasizes innovation, diversification, and strategic partnerships to capitalize on emerging trends and drive long-term growth. Winfield's acquisitions and divestitures are significant transactions that impact the company's financial statements. In terms of acquisitions, Winfield has acquired total assets in Australia worth RMB 22,369,983. However, it is essential to note that bills accepted by banks with high credit quality and other bank acceptance bills are not considered acquisitions, as they were transferred financial assets that were derecognized. On the other hand, divestitures refer to the transfer of financial assets that have been derecognized from Winfield's balance sheet. Specifically, the company has divested bills accepted by banks with high credit quality worth RMB 500,147,000 and other bank acceptance bills worth RMB 193,722,000. These transactions demonstrate the company's efforts to manage its assets and liabilities effectively through strategic acquisitions and divestitures. The company has indeed paid dividends to its equity shareholders. This information can be confirmed through two separate sources within the financial report. Firstly, on page 106, it is explicitly stated that dividends distributed. Yes, indicating that the company has made dividend payments in the current financial year. Furthermore, this payment is also reflected in a net decrease in cash due to dividend payments, providing additional evidence of the company's dividend distribution activities. Concerns about inventory buildup and supply chain disruptions have been identified in certain areas of a company's operations. On page 40, there is an explicit mention of concerns regarding both inventory buildup and supply chain disruption. This suggests that these issues are significant enough to warrant attention. However, on other pages such as page 60, the situation appears less dire. While revenue and gross profit decreased by 23% and 32%, respectively, there is no explicit mention of concerns about inventory buildup. It remains unclear whether this decline in performance is related to inventory management or other factors. That concludes the financial summary for TIANQI Lithium Corporation. Feel free to comment below, and I will be happy to answer them when possible.